When a major asset is ignored, major bottoms do unfold. This is the Equity Management Academy Mean Reversion Trading Weekend Podcast for November 6, 2021. Summary. The U.S. labor market got back on track with a larger than expected payroll. The faster pace of hiring shows that more Americans return to work as COVID cases continue to decline. Some 7.5 million people lost expanded federal unemployment benefits, which may have contributed to the increase in people on payrolls. The demand for supplies across the economy looks to increase in the short term, and everything from computer chips and grains to labor and lumber. U.S. job growth gets back on track in October with 531,000 gain. The U.S. job reports came out. The U.S. added 531,000 jobs. The U.S. labor market got back on track with a larger than forecast payroll. The effects of the Delta variant appears to be easing. The unemployment rate fell to 4.6%, while the labor force participation rate remained unchanged. The faster pace of hiring shows that more Americans return to work as COVID cases continue to decline. Some 7.5 million people lost expanded federal unemployment benefits, which may have contributed to the increase in people on payrolls. This unemployment rate report is bullish for precious metals, as fears that the Delta variant would expand is waning. The end of the pandemic may be in sight. Many people are returning to the workforce. This is an indication that the economy is picking up. We are still in a supply chain bottleneck, however. Over the next 3 months, we are going to see more demand come into the economy. And we are running into a wall of a lack of supplies. We have to allow for this relationship to unfold. Prices are going to adjust. Even though we may get a short-term period of price inflation as we move into next year, this situation will resolve and the economy will return to some sort of normal balance between supply and demand. The demand for supplies across the economy looks to increase in the short term for everything from computer chips and grains to labor and lumber. Taiwan is a major supplier of computer chips, and China's increasing aggression against Taiwan as it seeks to force Taiwan to become a part of China only increases the uncertainty about the chip supply. The inflation rate appears to be hovering around 5.4% if you include food and energy. The rate is significantly higher. They were removed from the inflation index because they were thought to be too volatile. If we are looking at inflation now as a measure of the broad expansion of the money supply, this is not transitory. The stock market continues to make gains. The gold market and the stock market have not done what some analysts predict: collapse, leaving the field clear for digital currencies. People are looking for places to put their money that are decentralized, which is why Bitcoin has attracted so much attention. Some of the money that has gone into Bitcoin has come at the expense of investments in precious metals. Faith in the US dollar is declining, which also explains part of the attraction of Bitcoin. Digital currencies, however, still have the flaws, such as fraud, which is largely hidden but apparently is far more common in those markets than in precious metals or other regulated markets. Gold and stocks are anticipating the opposite of what everything is thinking. Gold and stocks appear not to think that interest rates are going to go up next year. Interest rates are probably going to be a major issue. We will have to see what the Fed does with interest rates. Gold and stocks appear to be forecasting that interest rates will not go up. So there is no threat of higher interest rates, even though there is talk of higher rates and tapering. Gold-Dow Jones spread relationship. One major anomaly is the spread between gold and stocks. It is at a historic level. Either gold will move up significantly to be in a more historic ratio to stock prices, or stocks will go into a major correction. I believe that this is an opportunity for precious metals, Equity Management Academy CEO Patrick MontesDeOca said. With an asset that is being ignored and no one wants it, it's time to accumulate. This is going to turn in any time. Gold will adjust to its mean. Gold will break out of the 1830 level to the 2000 level in the coming year before September 2022. End of quote. Let's take a look at the monthly signals and see how we can take advantage of this potential breakout expected and position into the beginning of the next 360-day cycle that projects gold prices to trade above $2,000. November 1, 2021, Gold Monthly Report was published. Summary: the monthly trend momentum of 1788 is bearish. The monthly VCPMI of 1782 is bullish price momentum. A close below 1782 stop negates this bullishness neutral. If long, take profits 1819 to 1852. The close above 1788 negated the bearish trend to neutral. The close above the VCPMI of 1782 unfolded and activated the targets of 1819 and 1852 for the rest of the month.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ematotrade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.